On the 31st of October, Yes Bank informed stock exchanges that it had received a binding offer worth $1.2 billion from a global investor. Now, the bank did not at any point in time clarify who this global investor is or on what terms this money is coming in, but the bank did say that it would have to issue fresh stake. Sort of back of the envelope calculation would show that to receive that $1.2 billion, the bank would have to issue stake up to 30% of its current shareholding, and that would be something that will be a problem for the regulator, because the regulatory allowances do not, the regulations at this point in time do not allow such a large stake to be sold to a single investor. While all of those details are still pending, it is important to note that this money will help Yes Bank not only provide for the bad loans that exist on its book, but also fund the future growth of which it aims to achieve through retail as well as SME loans. But before we reach any of those points, let's try and understand where exactly Yes Bank came from and how it reached this current position. And for that, we'll have to go back a few years. 2011 particularly, that was in November of 2011 was when the Reserve Bank of India had deregulated savings accounts days. This was an important move in the history of Yes Bank, because essentially this helped Yes Bank bring up its savings account interest rate and thereby get more CASA deposits, which was essential because those cheaper CASA deposits helped the bank fund, helped the bank lend out more money to the kind of companies it had given out money to. Fast forward a few years, in 2013 in June was when the first signs of dispute between the Madhu Kapoor family, that is Ashok Kapoor, who's one of the co-founders of Yes Bank, as well as Rana Kapoor, started coming out. Essentially, Madhu Kapoor wanted her daughter Shagun Gogia to be appointed on the board as a representative of her father, the late Ashok Kapoor, who died in 2008. However, Rana Kapoor as well as the rest of the Yes Bank board had objected to it. To fight that case, Madhu Kapoor and family went to court, and that case came to an end much later, where the Bombay High Court not only allowed Madhu Kapoor to have a say in who gets appointed on the board, but eventually led to the appointment of Shagun Gogia earlier this year. Let's take another few years. In 2016, March 2016, that is when the Reserve Bank of India had completed its first asset quality review, and the results of which had led many banks report large asset quality divergences. And Yes Bank was, of course, one of them, with 4,000 crore worth of divergences that the bank had reported just as of 2016 March. A divergence is essentially the difference between what the RBI thinks the gross NPA should be and what the bank had declared as a gross NPA. So any excess will have to be reported by the bank. Not only that, it would also have to provide for those loans. Later, a year later, in March 2017, the RBI found another large divergence, about 6,000 odd crore, which was a big hit for Yes Bank, because all of those gross NPAs eventually added to how Yes Bank had reported its numbers, and it led to a lot of questions as to how private banks were disclosing information, relevant information from shareholders. In 2018 of March, that divergence problem did not come up for Yes Bank. The bank was very clear that the RBI had found no divergence, and that was obviously a positive. But by September 2018, all of that optimism around the bank had gone away, because the RBI essentially said that Rana Kapoor's 3-year term as the CEO would end as of 31st of January 2019, and the RBI will not give an extension to Rana Kapoor. Now, that was a big problem for Yes Bank, essentially because Rana Kapoor, the founder of the bank, was going to leave the MD and CEO position, and thereby the bank would have to find a new entrant to take over and essentially run the bank. So that brings us to January 31st of 2019, when Rana Kapoor finally exited. Now, between September and later when Ravneet Gill took over as the MD and CEO in March, there was really no clarity as to who's going to take over. By the time of end of January, it was clear that Ravneet Gill was going to take over. The bank put out a statement saying that Ravneet Gill will succeed Rana Kapoor. And as of the 1st of March, he took over, and that was a big positive for the bank. Ravneet Gill came from a foreign bank background, and the expectation was that he would bring in tougher norms as far as the bank's lending practices are concerned, as well as its risk functions are concerned. By 31st of March 2019, however, this was the first quarter that Ravneet Gill was announcing his results, Yes Bank's results, and Yes Bank had reported its first ever loss, about 1,500 crore loss that the bank had reported, which was a big negative for the bank, because as a private bank, as a new private bank, reporting such a large loss was obviously a negative. In the months that have followed since March 2019, multiple events have happened, the most important of which was actually Rana Kapoor selling his stake in the bank. Remember that Rana Kapoor had previously said that he would never sell the shares in Yes Bank. Essentially, he considered them as diamonds. But by the 1st of October of 2019, Rana Kapoor's entire stake in the bank had gone down to about less than 1%. So that was a big event as far as as far as the bank is concerned, because one of the promoters had actually stepped out. Madhu Kapoor and family had said that they would continue to support the bank as far as possible, and as and when they find a new investor, they will happily dilute their stake in the bank. By 31st of October, or as of Thursday, the bank said that it has received this $1.2 billion investment proposal from a global investor. Again, we're not clear who this investor is, but the bank's board will discuss this proposal on the 1st of November, when the results will be announced by Yes Bank for the September quarter. And that's when we'll know who this investor is, whether the bank will actually go forward with this investment proposal, and whether it will sell that stake, and whether it will actually approach the regulator for all the necessary approvals.